Okay, good afternoon, everybody. This is Dennis Wilburn with the Aftermarket Monday webinar for the active trend traders. This is one of our free webinars. We do have one other free webinar, and that's on Fridays at 11 p.m. or correction, 11 a.m. Pacific time. And we kind of go, the two of these kind of match together. What we cover today is what we'll cover basically the elements of it on Friday, plus a little bit more. Remember that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. We are currently in the process of waiting for some seasonality aspects to kick in for the end of the year. The objective for the Aftermarket Monday is to basically timely and actionable intel, identify timely and actionable intel at the beginning of each week, and or cover what we covered on Friday. Some of you are aware. I hope you've looked at the video, or if you weren't there live on Friday's session. My intention is, okay, now premium members of the Active Trend Trading, yeah, you get, all the stuff. I mean, all of the alerts, that's the text and the email alerts. You get the market reviews. You get all the proprietary information that we utilize for active trend trading. Well, both Mike Traeger and I have been talking and said, well, why don't we do this? To encourage people to tune in on Mondays and Fridays for non-premium members, we're going to go ahead and we're going to offer identify, if appropriate, one trade per month. That will be hopefully a strategy, one type of trade. That's where we'll be focusing. And then and then basically let the people know either on Mondays or Fridays, that's where the setups have to happen, when we're going to be entering a trade. And so that's what we're working on. So we'll do a real quick market review, stock, ETF setting up, what else we're going to focus on for the week. And remember, have patience, stand back, respect the rhythm of the market. So Aftermarket Monday for the week of October 15th and beyond, we're still in a market where buying the dips is the appropriate thing to do, and sell into strength, or do both. I use that as a quibble. The question mark. The market continues to show its strength. We have not had a significant sell-off in almost 300 days. When I say significant, that's a sell-off of greater than 10%. Seasonal expectation, October setups, and now we basically didn't get exactly our pullback into the September timeframe that we were anticipating. So we're looking for, that's going to be to slide later in the year. Which is around now, sometime between now and the first part of October. Again, seasonality on the indexes, primarily looking at the NASDAQ, QQQ, and the Russell, IWM, and the derivatives of that, the 3-time leverage index ETFs on those. So looking for ETF setups, waiting for pullbacks. I still like Netflix, NVDA, Tesla, and YY as potential, longer-term holdings. Netflix has earnings today, and what's it doing? Okay, it's up a little bit after hours after it reported earnings. Then Catfish Specials. That's one of the things where we're identifying stocks that are on the that have been on the IBD 50 list throughout the year, sometime during 2017, but have basically fallen off of the list and are now appear to be putting in longer-term weekly bottoms, and so they could lend themselves for a nice bounce moving into the end of the year. That's what we're gauging this off of, and basically just putting out a couple of trades on those. And so let's take a look at what the market is doing, then we'll come back to the individual stocks themselves. Okay, let's go. Yeah, I'm going to go ahead and just leave up the hourly chart here on the left, the weekly chart, the daily chart here in the middle, and the weekly chart over here on the outside. Now, I want to highlight, here's the play that we played on Play last Friday. One, we had a TSI tick up that happened on Friday. Basically on Friday, we took that trade. We had a close above the whole moving average, TSI ticking up. We also had a 3-line cluster the day before on the market forecast. That tends to be the ingredients for a appropriate upside buy, that the entity will rebound from there. Yes, it has been a downtrend. Yes, it may just bounce back up here to around the 50 level prior to the end of earnings, and that's okay, or even 49. We'll take off some some of that, but it's worth the risk, if you will. The risk reward is very high because your stop is just slightly below the low of this candle, and as you can see, we have the TSI on the weekly chart. Like to see get a rebound on that today. This week is not done yet, and it had a rebound, pop back down, but it's at a level -50, which corresponds with where play tends, or where entities tend to do their bottom reversals. And so and again, play had been on the list earlier. Let's take a little look at the S&P. S&P continues to basically just push higher. We have been talking about waiting for the pullback into the 8-day. As they like to say in Arkansas, it ain't happening yet. So basically, we have now have a level of resistance up here about 2560-ish. Could continue just to push up above that. Here is the if you're on your charts, if you just want to draw in this line here, that is the current uptrend line. As long as that stays intact, this uptrend is going to continue on. So where's our triggers? Basically, somewhere around a pullback into the 8 or the 20. It is well extended above the 50 and well extended above the Bollinger Band, the Keltner channels. And so one would anticipate that it might be running out of gas. We've got negative divergence setting up on the daily chart. Got a current squeeze. However, the price action isn't looking bearish yet. On the similar pattern, we have got the TSI on the weekly chart pushing up into new highs, where it's found resistance in the past. Will it basically drop from here? It doesn't usually get much above 60 on a weekly chart, so we'll hang loose with this one. NASDAQ. Again, NASDAQ broke out and is breaking higher. You've got this, we've got a level of support down here at about 60.13. Look at that on the Qs. Where is that level of support? Right here, it's 146.62 on the Qs. Again, you can see it's well extended. We do not have any type of crossover. We got a little bit of a tick down on the TSI, but it just was a squeeze for a longer trade. And so at this point, while this would constitute a hanging man, we are extended. We're getting a little bit of negative divergence. Nothing is saying, hey, I'm ready to pull back, and so we'll see what, again, transpires. We're waiting for the, whoops. Now, Russell did get a nice little kind of a pullback today, but it's an outside day. That means the high and the low are outside the range of last Friday's candle, at a level of support, which is down here at about 1500. We have the TSI now very nicely rolling over. If we break the 1500, look for us to get a bounce off the 20-day moving average, or even down at the lower portion of the Keltner channel, or even down here at the 50 level. We have strong support at the 1453 level. And I can draw that in just very quickly. Let me draw that in. I'm going to get rid of that other. Okay, so let's just draw that in real quick there. Take this away, remove that. And so, as you can see, that would be a pretty good pullback. If we were to be trading the T, TNA. This is, or why did I put TZA there? Okay, TZA. Let's take a look at TZA first. On a weekly chart, TZA looks like the TSI is trying to do a rebound from a low. At the same time, this looks like could it be an exhaustion move to the downside, or it's one heck of a bear flag that is setting up here. If we get a rebound from here, TSI ticked up on the daily chart a couple of days ago, but the price action hasn't followed. If it did give us a move like that, even if it moved back up to the $14, $15 level, how much would that be? That would be about a 12% move. And so just, I'm watching this because, as I said, it seems like currently it seems as if TZA would be supporting the longer term move. TNA, is that a inverted hammer on the Russell? And the answer to that question is, it is an inverted hammer like candle. It is not an inverted hammer for analysis purposes because it is not at the extent of an uptrend. Therefore, it is not a reversal signal as known by the inverted hammer. If it was up in this area, like this candlestick right there, which is a hanging man, that's at the end of an uptrend. Therefore, that would be considered a reversal signal. Okay, so I got to move right along here. So that's what I'm looking at with the Russell. Remember that last week in October we have the Fed meeting again. The expectation is that rates will be raised again at the end of October, and we'll just keep watch the odds on those. Let's take a real quick look at some of the ones we are looking at play. Again, we're in play at a good time towards the bottom. We're close to a stop out if in fact it does get stopped out. If we push up, I would like to see a move back up to around the up to the moving averages and actually get back above the 8-day and get the 8-day turning back up, because that may take us all the way back up here to about the 53 area. Remember, it does have play hasn't come out with earnings yet. One of the ones we had been working, which was JCOM. Look at the sell-off on JCOM today. Bam! Shooting star immediately, and then followed by a big downside candle. Earnings coming up here. I'll be watching this to see what happens when it gets down here about 73, 72. If it gets that low, with the anticipation of a potential pickup bounce. But it has this move today kind of shot itself in the foot as far as a bottoming type formation. We also looked at F5. F5 also got right up to the 8-day, hit it, reversed. After two fairly good moves, we are still working off of this hammer. This hammer that happened on the 11th of October is still in effect. Okay, that is still a good reversal signal, and we'd anticipate it to stay a reversal signal until its low is violated, and its low happens to be 114.63. So keep your eye on that one. We actually bought into this for the premium members on Friday because we had a nice TSI tick up. Nice TSI tick up above the whole moving averages, hit resistance, and has pulled back. What happens tomorrow? We shall see. We shall see. Okay. Okay, let's see. Take a real quick look at Kiwi. Again, Kiwi looks like it's selling off. We had been watching this for a couple of weeks. It found support down here at the 16 level, down to 1550 level. But notice, this move from here to here was done on below average volume, and all of a sudden you have a big volume, hits the 50-day moving average, has a big volume sell-off because that's where the overhead, and we had a clue for several days. That's where the overhead supply was sitting, and it finally just whacked it, fell. I think we still keep an eye on it, because we're getting mixed signals on it we're getting mixed signals on it right now. Take a look quickly at, as I said, Netflix. I didn't do that right. NFLX. There we go, Netflix. And again, I will switch this to the after hours. Well, maybe I will. I gotta be looking at the, there we go. Let me just switch this to the after hour show. And you know what, Eric, I may have messed up, because I'll go back and recheck that. But after hours, you can see, it's got a big move here. It is at all-time highs, and so it may explode further than that. And if it does that, then we're just waiting for a pullback into the moving averages. Let me go back to the Russell real quick. Okay, no, that's okay. Yeah, Russell, somehow I got switched over to the other charts. And so, quick look at Tesla. Tesla's got earnings coming up on the 25th. We're getting cross signals here. I would like to see a run into earnings. However, it may do a drop. If I pull back and hit down here at the 340-ish level, guys, look for a rebound there that would take us somewhere between, that would take us up to back up to the 360s prior to earnings. That would be a really good quick trade. So that's what I'm looking at there. NVDA. It continues to push to higher highs. If you are trading the NVDA strategy 3 trades with us, guys, it's up a little bit over 70%, and there's not a darn thing wrong with just saying, hey, you know what? We've had this trade on since the first part of June. It's up 70%. Let's take our profit and jump. I am going to be coming out with another video this week to talk about some refinements to Strategy 3 for those of you who are interested in Strategy 3, who are premium members. So, okay, guys, with that, I have reached my allocated time, about 3 minutes over. That's what we have for today. Look forward to seeing you on Wednesday night, and I'm glad to be back home and back in the swing of things. So aloha, God bless everybody. Have a great rest of the week.